Is anybody confused? Shouldn't be confused. Why not? Because today's Wednesday. Whip It Out Wednesday. And make sure that you go to the bottom, the description, because in there you're going to find several channels, which I support 100%. Also, what you will find are links to 2 separate brokerages. The one that catches my attention the most right now is Webull, because they are offering anyone who opens an account by way of the link in the description, they're offering them up to 20 free stocks. Up to. Today, of course, I'm going to bring you something special. Yeah, something special for all of you. Before I do that, I want to check on the market right quick, because that's what we do, because the whole purpose of this channel and the whole purpose of Whip It Out Wednesday is to encourage people to participate in one of the most important tools available to everybody in the hood. And it doesn't matter what your complexion is. That's irrelevant. What's more relevant is whether or not you're poor, working class, middle class. That's what really matters. Okay? That's what really matters. So let me take a quick look, okay? While I have you here, we're just going to take a quick peek and see. Where are you? You're right here. So what I like to do is go into the Yahoo app, Yahoo Finance app. I downloaded it. I got it on my phone. Oh, y'all check it. Yeah, y'all checking out the bling. Yeah. And on the app, I can see what all the major indexes are doing. The S&P 500, the Dow Jones, NASDAQ, the Russell 2000. And I can see what crude oil is doing, which is at 62.65. Up from the last time I was recording, if you remember. Gold, silver, the euro, the 10-year bond, which is at 437. And so on and so forth. And there are a bunch of other indexes that you can check. Stocks. If you want to check out some ETFs, mutual funds, they're all there on the Yahoo Finance app, which you could download at any point in time. And you can make a list of stocks that you want to keep an eye on. You can also link your account and you can see how your portfolio is performing right through the Yahoo Finance app. Well, enough of that. I've got in my hand right now, what I'm looking at right now, I'm calling it the excuse killer. And I'm going to put it up on the screen. This is the excuse killer. You got an excuse as to why you're not participating in the stock market, and this is not financial advice, but you have an excuse as to why? Really? You have an excuse? Okay. That's cool. You've got an excuse. So I'm going to address those who have an excuse, and I'm about to kill that excuse right now. This account that you see right now, Butter, is having a deposit made every week of $7, which represents $1 a day. $1 a day, y'alls. $1 a day. So you don't have $1 a day that you can put into this? Remember, I call dollars your power. I also call them employees. They become employees once they go into your investment accounts. Once they go into your investment account, they are now employees. And they make money for you. Especially when you purchase dividend producing stocks. They're working for you. Let's not forget that. So let me go right on ahead and continue with the excuse killer, because again, $1 a day, you can't do that? Seriously? Maybe things are worse than what even you imagine. Hello. We got a balance of $234.06. Now, I have the time frame set for year to date. So since January of this year, 2025, I can see how this portfolio is performing. As such, it is performing at a rate of 8.12%. So this portfolio so far is profiting at 8.12%. Is that good? That's actually excellent. If you consider that the average performance for a professional who's managing people's retirement accounts to 401k is between 3% and 6%, this little account, and that's important, this little account is performing better than them. I'm going to take a look at the S&P 500 and make a comparison against that, because that's what that's what the professionals are compared to. When you're judging the performance of a professional, they usually use the S&P 500, the performance of the S&P 500 as a baseline, and compare their performance. So I'm looking at the S&P 500, which year to date, let me just remind you, year to date, that little portfolio, $1 a day, is performing at over 8%, just slightly over 8%. And here's the S&P 500 year to date. It's performing at a rate of 1.52%. Hold on. 1.52%. So this little account isn't just outperforming the professionals, it's outperforming the S&P 500, which, in case you didn't know, performs at a rate of approximately 11% historically. So if you look at it within the past 100 years, it performs at a rate of approximately 11%. So that little account is close to the historical rate of the S&P 500. So I'm going to ask you again, what is your excuse? This little account, $1 a day, is outperforming the S&P 500 year to date, outperforming professionals. $1 a day. My God. I mean, seriously? $234. That's what the balance is right now. $1 a day. Really? That hurts that much? $1 a day? Smokers, how much do you pay on a weekly basis to support your habit? Because that's what it is, right? A habit. How much do you pay weekly for this habit? Could you imagine if you quit that habit and you took the money that you were buying cigarettes with and decided to go ahead and put it into an investment account? Where would you be financially? So this one's $234. That's now. That's now. You know how much, by the way, AJ adjusted his deposits. He went up from 35 to 50 a week. Occurs automatically. He ain't even got to think about it. Once the paycheck comes through, ping, the $50 is transferred from his bank account to his investment account without a thought. So when he goes into his account to see what he could spend the excess money he has on, when I say excess money, I'm talking about after he pays all his obligations, his bills, whatever he's got, and he's got some money left over, also known as residual income. Residual income. And he'll figure out what his residual income is after he calculates what his obligations are and that $50 a week withdrawal. It's after that. Good times. Good times. I want to look for something right now, right quick. Okay. Oh my goodness. Say what? Yeah, you have no idea what I'm looking at, huh? Well, I'm going to tell you what I'm looking at. The ADP jobs report. Why should I care about the ADP jobs report? Why should I care? Because it has to do with the economy. That's why I care. And why do I care about the economy? Well, when the economy gets bad, a lot of people get fired. When a lot of people get fired, they don't buy as many things. When they don't buy as many things, that means that these businesses that depended on people buying things from them and they're not getting as much, they have to start firing people. Not a good thing. I'm going to read the headline. I don't know if I want to read that. Weakest ADP jobs report in 2 years points to hiring freeze tied to trade wars. Well, they even tell you what the reason is. Is the worst over, they ask? And it says here, after a strong start to the year, hiring is losing momentum. Interesting, because it says it's the weakest jobs report in 2 years. Wait a minute. 2 years ago? Who was the president 2 years ago? I bet a lot of people know what the answer to that is. Because when the ADP report came out weak back then, every MAGA mother lover was out there screaming and pointing fingers and mother effing Joe Biden and his administration and this, that. Listen, folks, I'm going to say it again. I'm going to say it all the time. If you're going to become a serious investor, you cannot get caught up in personalities. The personalities should be irrelevant. And when you get information, don't just use the information that's off the top, what you just got. Look into it a little deeper, because you're going to want to find out what the cause is behind that data that you just received. All right, stop playing with me. Listen to this. Privately run businesses created just 37,000 new jobs in May. The smallest increase in more than 2 years, as the worst global trade wars since the 1930s. They got to go back to the 1930s just to see what the worst global trade war was. And that spurred many firms to put a pause on hiring. How many people are graduating from college looking for work right now? And very few people are hiring. Hopefully they didn't graduate yet, because then if they went and got themselves a loan, they got that student loan hovering over their head. Oh, that's not a good situation. The small increase in private sector jobs last month, as reported by payroll processor ADP. You ever seen that? You ever seen those letters on some of your paychecks? ADP, that's who it is. Was far lower than expected. Economists surveyed by the Wall Street Journal had forecast 110,000 gain. They were expecting 110,000 new jobs, and all they got was 37,000. That's far short of their expectation. Really not good. The lackluster ADP reading could foreshadow a similarly weak jobs report on Friday, when the Bureau of Labor Statistics posts the official U.S. employment figures for the month. ADP is historically not a good predictor of the Bureau of Labor Statistics report, although the two do move in the same direction over time. They move in the same direction over time. So if ADP saying that there was a lackluster increase in jobs, at some point the Bureau of Labor Statistics will report something similar. Maybe a little better, but maybe worse too. Bling bling in the house. So folks, if you still have an excuse after what I just showed you, you still got an excuse? Man, listen. If you're not financially healthy, don't go blaming politicians. Don't go blaming your parents. Don't go blaming your family, your friends. Don't go blaming nobody. Because in the description below, there's a link that you can tap on, open an account, fund it, and start buying you some stocks that will either increase in value with time, which you can sell at a later date, hopefully as beyond a year. But this is not financial or investment advice. Or it could start paying you every 3 months right off the ripple. It's up to you. But like I said, don't even try to blame anybody else. No, don't even try that. You're going to look silly if you do that. You're going to look silly. Responsible people are going to look at you like, what the hell did they just say? Oh, hell no. There's something wrong with this person. Yeah, that's what they're going to say. Believe it or not. Maybe not in your face, but they're going to say that because you've got an opportunity here in the United States of America that you don't have anywhere else in the world when it comes to the stock market. So listen, y'alls. I'm going to let you go with this one. I'm going to give you a pass if you haven't done this yet. I'm going to give you a pass. But come next Wednesday, if you haven't done something, don't look to your left, your right. Don't look up and down, sideways, turn around. Don't do it. Because it's all on you. All right, kitty. Get these people out of here so that they can go ahead and tap on the description below. Love, peace, and hair grease, y'all. Stay fresh, keep it moist and profitable.
Arabam Dacia, seviyorum çift kalem aça. Göremedi kimseden fayda. İşler